Jocelyn with comortgageresource.com. In this video, I'm going to outline the 3 questions you should consider in picking the right mortgage for you. There are so many different mortgage programs out there, which is why I want you to consider what your goals are moving forward to make sure that you pick the right mortgage. Now, this is also, again, mortgage banks, mortgage brokers, banks, credit unions, they all differ in what they can offer. So we also need to make sure that you understand that if one mortgage company doesn't have necessarily what you want, another mortgage company may. So the main programs that are out there are the conventional, the FHA, and the VA loans, and figuring out which one's going to be the best one for you. So let's take a look at some of the questions to consider so that you can figure out which loan to go with. The first most important question may also be one of the harder questions is, how long do you plan to keep the house? Well, that's hard. I couldn't even answer it when I moved into my house, and quite honestly it changed every 5 months. So, but if you're planning on moving into it and you know it's going to be a starter to launch you to the next house, or there's no way that there's enough room for you to have kids in that house, you know you're moving out, those are things to consider in the mortgage that you're going to obtain. So for instance, if you're going to stay in the house for 7 years or more, it may make sense to put more money down. It may make sense to have higher closing costs and a lower interest rate. So understanding what your goals are with the property can very quickly and easily help you decide which mortgage is going to be the right vehicle for you. So having a discussion with your spouse or just sitting down to understand that if it's just you buying the house. Also keep in mind, can you use this as an investment property down the road too? So maybe you aren't going to stay in the house beyond 5 years, but it could become a great vehicle for a long-term goal. So again, that would mean you want a lower rate. You may want to put more money down. The next question to consider is, how much financial risk are you willing to take on when you buy a house? This doesn't just mean, should I do an adjustable rate mortgage or a fixed rate mortgage? And while it does, those are good things to consider, you want to really understand what your existing budget is now. You don't want to move into your house, and while you might fall in love with it, it may not be fun that you can never leave your house to order pizza or to go skiing or whatever the case might be. Make sure you really understand your budget, not only from what do you pay per month for your house, but from how much are you saving to anything to what your actual down payment's going to be. So you could put 5% down or 20% down. So really understanding what buying this house and how it's going to impact you financially, and making sure that you're comfortable with that. I do have a lot of people, they come to me maybe 6, 9, 12 months out from buying a house, and what we say is, if you think you're comfortable with that payment, start pretending like you're making that payment. So your rent's only $900, you want to make a $2,000 payment once you buy a house, start taking the other $1,100 and just putting it in a savings account and see how that feels for the time that you're leading up to buying your house. If it's not comfortable, it's a good indicator that you might be overbuying. The third and final question is, how much money do you have to put down on a house? Now, for first-time home buyer programs, there's a lot out there that are Colorado-specific, city-specific, county-specific, and I do want you to know of all of those programs if you're a first-time home buyer. Our website, comortgageresource.com, provides a full report of all the first-time home buyer programs that are available in the Colorado area, so make sure you check that out. Now, beyond that, if you're not using any sort of down payment assistance, the minimum down payment is going to be 3.5% for FHA. For our veterans and a VA mortgage, you don't have a down payment, which is great. Now, conventional loans, the minimum down payment is 5%. Now, making sure that you're working with a lender that's going to outline all of the options that are available to you and what are the pros and cons. Now, for instance, in our market right now, interest rates are 3-4%. So because we're not in a market of 15-18%, putting a minimum down payment could actually work out great for you, because you now have more of a cushion. You might want to do some work on the property after you move in. It's not going to affect you that much. So for every $10,000 more you put down on a loan amount, it's only going to affect your payments by about $50 a month. When people hear that I'm going to take another $10,000 out of my little nest egg to save $50 a month, they decide that it doesn't make any sense at all. So the other thing to consider is in how much you're going to put down. The only way around mortgage insurance is putting 20% down and doing a conventional loan. That's the only way you're going to get around mortgage insurance. Now, also keep in mind, as of January of 2007, mortgage insurance, like your interest rate or your interest accrued on a loan, is tax deductible. So while you hear mortgage insurance and you might shudder a little bit, it really isn't that big of a deal. So also make sure when you're outlining each loan and which ones require what down payment, make sure that you understand what the monthly payments that come with the different mortgages as well. Those are the best tips that I can give you on knowing what down payment that you want to put down for your house. Considering these 3 questions is going to help you pinpoint the right mortgage for you. Now, if you want full access to this whole article, click on the link below this video, and the link or the article is titled "The 3 Mortgage Questions to Ask in Finding the Right Mortgage for You."